Hello, everyone, and welcome to July 21st of 2020 with Alphas holding the lead with XLU at 20%. Let's go look at those charts. There it is, 20%. Now, it was at 36% a couple of days ago. Up here is a 36. Once last bar low, exit has been issued. Exits do not retreat. So there is a point, exits do not retreat, and we got over our 30%, and we are now running last bar low until this trade will stop out. And we're looking at possibility of maybe 180, 170, 180 on 3 contracts with an ode of 1926. Okay, our next leader is XLV, and there it is here. This is XLV, and it doesn't have it's still in standard. What's standard? Standard means that any exit far away from the action. Why? Because we're doing on the 30-day moving average, and there's only 2 exits. The close is the opposite of the trade, or we take profit at 30%. Under 30%, we're still here writing it out, waiting for it to either come down here or get that 30%. So XLV 17, 23 more to go. Boom, done. All right. Next leader of contention is PGR. And PGR is kind of neat because look at the ride. Look at that. And you can see the curve is just so if we can get just a little bit more oomph, we can maybe get our 30%. That, or just wait it out to come out here. So this trade, now also note, 30-day moving average trades will last longer than the price channel trade or taking profit or stopping out when price action crosses the 30-day moving average line. This is a close is below the 30-day moving average for the calls. That's where we're at here. And so this trade just might linger, just might hang around for another 2 or 3 weeks. You'll finally, one of the 2 things will happen. The 30-day moving average will catch up and take it out, or we reach our 30% take profit rule and get out. So that's why we're going to be seeing that. Okay, moving on now to SLB. SLB joined us today right there, and a nice entry too. I mean, this is kind of cool. I mean, we got in and we ended up with a small profit for the day, 9%. The stop is way down here. Again, this 30-day moving average trading. We have to wait for a close below here or get to that 30%. New Mount is the next one, and they're all small percentages, but understand that a small road can lead to a bigger lead to a bigger reward, and we've seen that in past videos. And when we did the mixed strategies of price channel and the 30-day moving average trading together, along with some other more exotic trading strategies in the first 9 months of this channel. So we're now in the last. We're now going to run this for the next 6 months of the battle of the strategies. And New Mount is running a small percentage of 3%, and the predictive stop is at the bottom. That's just, I put the stop in anyhow as to remind me I have to move it. If I don't have it there and don't remind me, then I don't think about it, and then I make a mistake. Okay, that takes us to the last leader of the group, and that's Yelp. And Yelp is running only 1%, but it's a start. It's above. It's got a lot of running room. The stochastics is quite in good territory. RSI is in quite good territory. So we have a good, nice possibility here. All right, let's conclude now here at the alphas. What happened to Capri? What happened to Capri was this: human error. Yeah, human error. I had a close below the 30-day moving average. We set it up. But when I was doing the numbers, I didn't put in my marker first. I was taking, and I took the numbers off the MA. I did the order, and then I did the marker, not realizing that my order was wrong. That was a mistake. I always suggest do your markers first. Put in your details first. Then this way, you don't when you're able to check the order and say, okay, my marker's at 1528, is my stop at 1528? If it doesn't match, you got to fix your order. So here's what happened. That's what happened. So this resulted in a 37% loss in 6 days, 129 times 3 contracts, 387, 37 with $4 in fees, with 391 on the trade loss, coming out to 5,088 new owed. So the good thing, remember, wins are the points for the scoreboard. It's not how much money they make and if they get to the winner circle, is how many times does a trade get in and get out with profit. Those are the wins. Right now, the Tigers have 2 and Alphas have 0. So maybe later in a couple of months, things will turn around and then Alpha will start catching up, because it's going to take about maybe 10 or 12 wins to overcome this 5,088. So that's what happened with Capri. A good example here also, let's look at T to show you the example for the 30-day moving average exit. Now look here, this is a beautiful textbook. We set it correctly here, off this low, right there. And what happened? It went back up. It went up. So T did not get stopped out on their call. So that's kind of neat. It's holding right there. All right. That now takes us over to the Tigers. Let's do that. Let's go over to the Tigers and clean the Tigers up. The Tigers, now remember, Tigers is operating on the channel, price channel. It's price channel theory. And that's what our Tigers are operating on. So got to do all this adjustment when we switch accounts. Okay. All right. So here we are. And there's the price channel right there. And now in price channel, we have 3 exits. The initial exit starts down here at the green price channel. Then when we get to profit zone, we go to the black price channel, or MA, which is the moving average, or the dipper. Right now, UAA is holding at the dipper right there. And TLT is going to be the same. They had a dipper too. And it was actually established 2 days ago right there. There's the dipper right there. There's our stop for the price channel strategy. Duke and ED are running behind, and there is 1 stock in the order sheet. So that is the conclusion of today's report for the losers become winners, with XLU running at 20% for the alphas. And I thank you very much. Take care. Bye-bye.